All right, well, airlines doing pretty well right now. Southwest once again flying high with its fourth quarter numbers in. CEO Gary Kelly joining us now from Dallas. Let's just go through the earnings. Gary, $115 million, up 55% from a year ago where you were at $74 million ex items. So just talk about the improvement you've seen. Not a record quarter like you saw in the third quarter, but still pretty solid numbers.
Very solid number, Poppy, and great to be with you. And
you too.
We were delighted with our fourth quarter, and really the 2010 results overall was a great year for us on the heels of essentially a lost decade for the airlines. It's been a very, very tough decade. So we've seen very strong revenue results, something we've been working on for years, and I'm delighted with the customer response.
Last time we spoke, you said the economy is in terrible shape, and that was only really 3-4 months ago. So where are the soft spots that you, as the head of this company, are keeping your eye on?
Our pricing is good. Our scheduling is great. The new markets that we've entered have all been very successful, so all that feels really good. If you turn to the cost side of the equation, clearly, we, along with the rest of our peers in the industry, would say it's fuel. It's all about fuel, and fuel prices were up 12.7% in the fourth quarter versus a year ago, and we still had decent results. We would have had a record quarter potentially, or certainly had a better chance had fuel prices not escalated so much. But in the first quarter here, we're looking at 20% year-over-year price increases, and that's what's really tough for us to manage.
Right.
There's nothing new about that. That's been the case,
part of the business.
For the past. That's part of the business, but that's the soft spot, is trying to deal with very volatile fuel prices.
Right. I mean, we have oil over $90 a barrel. It's been there for a while, and it's not getting the attention that I think it should be right now across industries and just for the average American and what it's done to gas prices. You said last time we spoke you're comfortable, you're hedged in the mid-90s. So you're okay right now, but you've got to be keeping a very close eye on crude.
Yeah, we are okay and more than okay. I think that in terms of our business and how it relates to fuel prices, we are seeing very strong leisure demand. We're seeing an improving business demand, business travel demand environment. I think that's going to continue vis-a-vis the economy and our concerns about the economy that we continue to have, but we're still seeing strengthening in the economy. So we're protected at $95 a barrel quite well. We're in the money with our fuel hedge, which goes out through 2014. It's just that we won't be able to drive the earnings growth that would support buying airplanes and creating more jobs that we would be able to do if we had stable fuel prices for a couple of years.
Let's get to the jobs picture. You did talk about your desire to hire when we spoke in the fall. Has any of that been implemented, or because we've seen this rise in crude and it seems like we will see the continuation of that, what does that do to your hiring plans?
Well, we have been mentally prepared and financially prepared for higher fuel prices. So we're not at all shocked that we are where we are. We have a schedule that's published out through August of 2011. It includes more flying than we had in 2010 and more jobs. So
any indication of how many more jobs?
Well, we increased our employment at Southwest in 2010 by a couple of hundred. It will be more than that. I don't know that it will be up 1,000 employees in 2011, but we'll be up in the hundreds from where we start the year with our additional flying. So with fuel prices where they are, we don't have any plans to change that.
Right.
But if they continue to escalate from here, clearly there's a point where we have to revisit our plan and change course. And I'm not anticipating that, but obviously we're trying to stay right on top of that.